Hello, everyone, and welcome to the next edition of Streamtime Sports. I'm your host, Nick Meacham, and I have a very special guest today joining me. But let's set the scene first before we bring him on stage. Now, if you think about major investments in the sports industry, particularly the last decade or so, you have to look towards Bain Capital and George Pyne and what they've been doing with some pretty impressive resume of companies they're working with. Now, just to set the scene, I thought I'd talk about Bruin's investments to give a sense of the scale of what we're talking about. Now, before we bring on George, it's also interesting to set the scene on some of the fundraising and who they're working with from that perspective. Now, Bruin has describes itself as an investment and operating company that specializes in working with capital partners and management teams to build best-in-class global sports, media, entertainment, marketing, and technology companies. And if you look at the list, you've got companies like Deltatre, which they bought for a reported $160 million and sold it for around $900 million a few years later. They just recently announced the Two Circles sale of their investment, which they bought for a reported $40 million US and sold it for about $300 million. On Location, which was a deal with Redbird, they bought that business for about $70 million and sold that for $660, again, only a few years later. And they've also got investments in companies called Full Swing, which is a golf simulators, Odds Checker, TGI, SoulSight, Proof the Pudding, and Engine Shop, which are all different types of businesses across the sports industry. Now, the funds that it's raised over the time there's been a $250 million from WPP, one of the biggest agencies in the world, and even a secondary fund of $600 million from CVC Capital and the Jordan Company, which are obviously quite famous investors, CVC, with regards to rugby, F1, and a whole bunch of other sports properties they've invested into. So if you look at Bruin's, say, resume, Bain Capital's resume, you have to really see that they have not only put their money where their mouth is, they've been very successful in some of the investments that George has led. And even just a few weeks ago, we saw them announce an investment into Box to Box, the producers of Drive to Survive, Full Swing, and the Breakpoint series, which are all housed on Netflix. So it looks like they're not sitting still. I'm really excited to have George on board, who really cut his teeth in a variety of different organizations, but mainly across NASCAR and IMG in senior roles there. But look, we're here today to talk about Bain Capital, their recent exit and also sales. So without any further ado, here's me talking to George Pyne about Bain Capital. So, George, great to have you on the Streamtime Sports podcast. Now, you have certainly started 2024 with a bang. Just talk us through what some of these new announcements that have come to life, both your investment into Box to Box and obviously the exit on Two Circles. What's the logic behind those two moves?
Yeah, no, thanks a lot, Nick. Great to be here, and thanks so much for having me. On Two Circles, look, Gareth Balch and the whole management team did a fantastic job in creating a lot of value at Two Circles. Our primary job is to generate returns for our shareholders, and so we were able to do that. We had a lot of great things there. We took a little more risk, meaning we were a little more aggressive in the deals than they had been prior. We made investments, and we had geographic expansion in different territories. The United States, Australia, and others. So it worked out really well for us, and we're excited for the management team, excited for the company, and excited for our shareholders. And then, of course, on Box to Box, kind of when you start thinking about Ronaldo and Messi and those guys having like 500 million social media followers, athletes today are more and more influencers, and media is being consumed in so many different ways. And so we've always wanted to get involved with the media company. And we had the good fortune here of partnering with Box to Box. James and Paul are incredible talents, have done an amazing job. And so we're very excited about being part of the journey with them moving forward. So like you said, we're off to a good start. We got to keep it going. The business I'm in, what you did yesterday really doesn't matter. It's only what you're doing moving forward. So we don't rest on our laurels too much here.
Absolutely. So just reflecting a little bit on the Two Circles relationship, the journey that you went through with them. Obviously, I'm someone who's followed Two Circles right from the beginning point. Good friends with Matt Rogan, who was one of their co-founders, and followed their journey. And it's been pretty incredible and to see their expansion and the impact they've had across the industry. What was it that made you decide to invest in a company like that at the time? Because at that time earlier, it was mid to early stages, and looking at some of the investments you guys have made, you've invested in some very impressive businesses that have a great track record. And Two Circles, I wouldn't say they had a great track record, but probably at an earlier stage in life cycle, perhaps to some of the other investments. If I'm not off base there, so just talk me through what made the decision to sort of invest in more of a management professional services company versus some of the other investments you've made.
Yeah, a couple things. One, you're right. It was a little early stage for us, but we had worked with them on Overtier and Game Pass, and we got to know them really well. And I was just really impressed with the way they approached things, the way they worked. We got to know Gareth and Matthew Entwistle really well, and we were just really impressed with those guys. The other thing was we look at growth segments, and I really believed and still believe that data is a growth segment. And so I saw what they were doing with data. I saw what a good job they did on Game Pass, marketing to people directly, subscriptions to Game Pass, and what turned out to be 181 countries. They were really good at it. And so I really felt the category of data, and I just got to know the people really well. It gave me a lot of confidence that we could build and grow the company. And, quite frankly, they exceeded our expectations, which I think when you look at it just at the highest level, you have a really good category data, and then you have a really good management team. And when you have those two things put together, I think good things happen. So I think, that was kind of the thought behind it, and it's exactly how it worked out.
No, they've definitely been influential across a lot of key markets, particularly in the UK and Europe, which has been screaming out for more professionalism. Let's be honest, more business expertise, and that's really been something that they've really brought to life in those markets. So why now? Why decide to step away from the Two Circles relationship? I know there's always difficult to choose when's the right time in terms of from an investment perspective. But why did you decide to move out move away from the business now and let Gareth find another partner to work with?
People ask that. It's a good question. People ask it all the time. It's a partnership between us and the management team. And when you reach a certain level of success, I find that everybody involved wants to realize success. And so I think we had just had a lot of success, and people wanted to realize the success. Quite honestly, in the journey here at Bruin so far, that's the exact same thing that happened at On Location, and the exact same thing happened at Deltatre, and even Overtier was very successful. My experience is that when everyone involved in the partnership, you realize a lot of success. People want to realize the success. So I think we're just at a point where we had a lot of success, and it was time to kind of realize it for everybody involved. And ironically, in all those situations, I've been always in the more reluctant guy, because I'm an operator at heart, and I kind of love all this stuff, and so it's hard to let go. But everybody's got their goals, and of course, I have shareholders, and what people need to know, I guess your listeners, I have to go to these people, I have to ask them to believe in me, I have to share with them a vision, and I have to ask them to take a leap of faith. And so, when you're in my shoes too, you have a real responsibility to those people that have given you financial support for them to do well too. So it's, I have to think about them. I have to think about our team. We have to think about the management team. And so far, it's always been everybody's kind of came to the same conclusion at the same time. And that's great, because I don't feel like anyone was forced in a certain direction that they didn't want to go. And so look, and the fun part for me is I stay friends with all these people. So, John Collins is CEO of On Location. We're going to lunch here in a couple of weeks. John Piero is one of the founders of Deltatre, calls me every Christmas Eve. And I was, Gareth, I know we'll be friends for a long, long time. And even, even the guys at Overtier. So, as I tell everyone, we're all on a journey. We're lifelong friends, and that's not going to change. So I'm excited to see what Two Circles does. It's a great company. I'm excited for Charterhouse. I'm excited for Gareth and the team.
So why don't look at and reflect on some of the investments you've made. I want to talk about the box-to-box investment in a second, but some of the investments you have made across the industry. When you start piecing them all together, what stands out to me is it really feels like a broad spread of companies across the entire sports business ecosystem. I'm guessing that wasn't by accident, Georgia, but talk through us why you've made some of those decisions to invest in businesses ranging from, design and experiential agencies through to betting solutions to digital transformation partners, golf simulators. Just talk us through what your playbook, I suppose, is on why you have made those investments over the years.
Yeah, I mean, I think what we've started with is the business underdeveloped? Do we believe that business can be more, either through opening up new markets, by deploying capital? Opening new markets is tapping into our global network. I mean, what we've really built here at Bruin, which existed at it's 30 years of hard work. Being at IMG was in 30 countries, so we have a global network. And can our global network benefit that company? And really, when you say global network, it means opening up new markets, opening up the United States, opening up Australia, now even opening up Europe, as odd as that might sound. So we're able to take companies now to Australia, to America, and to Europe. My favorite is we have a company in Australia that signed up the Giro Italia, as part of our network. So can our network influence the outcome of that company? Now, it's two things. One, influence the company to accelerate growth, but also as a bit of an insurance policy if things don't go the exact way that you had planned. And that's kind of worked out both ways, for us. So to me, it's a good insurance policy and it's a good offensive strategy. Then the other thing we look at is, and we've gone really more growth and more, hey, look, media is changing. Let's invest in the change in media. And so when you think about data in two circles, that was the change in media. When you look at Deltatre, that's the change in media. Even when you look at TGI and virtual signage, that's the change in technology. Full Swing is a technology provider. So when you start looking at us, we're really looking at, hey, technology is changing. How is that influencing these businesses? And does it have a tailwind? So if you have a category that has a tailwind, and then you have real added value by us, to me, then that becomes exciting. And the last, I guess the cherry on the cake is a great management team and good leadership. And so when you put all those things together, good things happen. And so that's kind of how our thinking has evolved. You are right, Nick, though, that when I started this, would I have believed that we would be as global as we are? No. Is this what I thought it would be? No. We have people on the ground. I don't know the latest stats, but I think it's like 16 countries, and we do business in 51 countries. And when I started this, would I have believed that would be the case? Absolutely not. But it evolved into tapping into our network. And of course, the network, growing up in America, running a federation in America, is strong in America, but it's also pretty strong outside America. And so that's really been the value add for Bruin. In addition to, I like to think that we're pretty decent people to work with, very streamlined. And, when I meet the companies and the CEOs, I always say the only person you'll always deal with is me, which is true. So that can be good or bad, depending on what you think of me. But I stay involved with the companies, till the end. And the last thing I would just say is, yes, proof in the pudding, On Location, those were not tech related, but we felt those are businesses that had real growth potential and that we thought we could add a lot of value to.
One of the things I look at and reflect before coming on this podcast, George, was that looking at the level of investment that is coming into sports, there's a significant amount of money coming in different areas, from different areas and into different places. But what Bruin have done is, I feel like, I don't want to say carved out a niche, but it's more they've carved out their own space where there's a lot of investment from different funds and other properties into teams and clubs and leagues, and trying to get a piece of that commercial pie from a league-wide perspective. And you've got a lot of people trying to work in that startup space and trying to take bets in short to try and get the best returns they can. There doesn't seem to be a lot of players really investing in again, into the ecosystem itself, investing into sports businesses that can drive the industry forward, like particularly like Bruin has. Why do you think you agree, firstly, and why do you think that's the case?
I agree. That is kind of as you said, we'd better say that area we've carved out the niche, but nevertheless, you are right. I mean, I think that is really kind of where our differentiator is, that we're really investing in the businesses around sport than investing into the federations or clubs themselves. And you're right. I mean, there's a massive amount of money being invested into the clubs and the federations, which from what we're doing is actually a good thing, because it makes performance in excellence in the companies around the sport more important to pay off for those investments. So it's actually a good thing. And why there aren't more people that do that? I do think the background's unique when you think about it, right? Ran a federation, worked for a private equity guy for 9 years, running a company that was in 30 countries with vast lines of sports business is a unique opportunity. And so bringing that skill set in, and I have to give credit. The guy was tough, but I learned a lot from Ted Forsman. I went in his office, or he came in my office every single day. I was there. And so I apprenticed around him. And, I have to give credit to some of the guys that, Bill France, John Portman, Ted Forsman. I worked for great guys, and I learned a lot on the financial side, which complements the sports operating experience. So I think that background was a little bit unique, which allows us to play in a space that other people, you might have somebody else that has operational experience, but maybe not as much financial experience. You might have someone that has a lot of financial experience, but not as much operational. And then, somebody, Bruin right now, we have 14 advisors all around the world. And so we really do have a global network. And so that's kind of a unique background that gave us this kind of place that we're kind of at right now. That we, are there people that we compete with from time to time? Yes, but it's never the same person. We never see, the same person. And we do a lot of our stuff's bilateral, not in processes, where we get to know the management team. We like them, they like us, and we figure it out.
So with the box to box investment, God, a bit of a tongue twister for me. What's interesting about that business is what they have done so far has been truly transformative to the properties they work with, because they found again a gap and an opportunity with what they did with, say, the Drive to Survive series has obviously caused a huge momentum shift with regards to F1 and its ability to engage new audiences. And most people, both in F1 and around it, will say that was one of the driving forces for their growth and interest from a younger generation of fans. They've also recently done Full Swing and Breakpoint series for tennis and for golf. It seems like one of the questions for me looking at them is, what is the next step for them? So they're getting someone like you guys on board. One of the lines I think you use is to be flexible with the capital investment to try and drive growth for these operators that you're working with. How does a business like that is come out of the gates pretty quickly? How do you keep momentum with something like that in a market that has seen a lot more people come to the table with ideas and documentary series and those types of storytelling opportunities around this space?
Yeah. So again, it's, I'll use two circles and compare them back and forth. So one, you have a really good management team. Two, you have a really good product, right? I mean, like I said, media is exploding, right? And so when I look at things like Spring Hill Media, Omaha Productions here in the U.S., creating enormous value, I see Box to Box as somebody that has the potential to be like those other entities. So I think it's a great category to be in. And when I was here in the U.S., I won't manage the commissioner's name, but I often go around and ask friends for advice, and they say, "Man, we really think media is going to explode, short and long form content. We just think it's going to grow and grow and grow." And I know that lunch in August, it wasn't lost in my mind. So I think the category is really good. I think the management team's really good. So those, if you think about Gareth, really good management team. Data is a really good category. Media is a really good category. James and Paul are really good executives. So then now you sit there and say, well, what about us? Well, we've got a global network, although they're pretty penetrated, but we think we can add to the network. And also, just like Two Circles, when we work with Two Circles, when we started, they were primarily fee-based. And we started taking more risk, meaning lower fees, but more upside. And we started investing capital in some acquisitions and in new businesses. So I think and it worked, right? And so the same thing I see here with Box to Box, where we can invest capital in projects where before they might not have been able to invest capital in those projects. We might be able to do acquisitions now with Box to Box, where before they might not have done those acquisitions. So having capital at their disposal in terms of making investments on projects that take risk or to do acquisitions are new tools for Box to Box that I think can help accelerate their growth. And lastly, again, opening up our global network. So those three things, when you marry with a good category with a good management team, just like we did with Two Circles, we hope that's a recipe for good things to happen.
George, you mentioned that you're hearing and seeing, the growth of media sort of exploding in terms from a consumption perspective, I'm guessing, but we're also seeing across the industry some challenges, particularly for the lower tier sports properties, less so for the top tier, around media rights revenues. So how do you think? What's your take on kind of that dynamic or that bipolarization, I suppose, of massive increase in media and engagement and consumption happening across the world, across all platforms, and some of the challenges of some sports properties with recent news, not all properties, but some properties struggling to tap into that and drive effective revenue and revenue from it, which historically media rights has been the primary revenue driver for a lot of tier 1 and tier 2 sports properties until this point.
Yeah, so it's kind of a tale of two cities. On the one hand, linear media is changing, right? And the financial model on linear media is changing. And that financial model was very attractive to sport. And that's probably going to keep changing. It's not going to go away, but it's going to change. And so that they're going to have less money to invest in everything. And that's going to have some impact. And as you point out, having some impact on sport already. Now, the new horizon for sports will be short form content, which really has no limitation. And also building a direct one-on-one relationship with consumer through data, I think really is the new frontier for sport. It's going to take a long time, I think 10 years, to really get to that place where I have a relationship with you, the consumer. I'm sending you, and again, that's where Gareth and those guys are well positioned. Like, I understand data. I'm going to be sending you news, information, content, offerings that are specific to you. And I think that's the future. I'm even looking, at virtual technology that you're going to have customized advertising someday in streaming events. And so I think you're going to go to a more customized space and be thinking about terms like lifetime value of the consumer, which you're not thinking about, today. So there'll be a whole new frontier for everybody, but it'll be a transition to getting in that frontier. And that transition could be bumpy because, as you said, the linear rights, while not going away, may not have the robust growth that they used to have. So we're at the beginning stages of that transition, and we'll have to see how that, all plays out. And lastly, linear television, sports is invaluable. It's by far the most valuable thing on linear television. Some of these direct platforms, Amazon, for example, they're in a whole bunch of different industries, and they're already building the one-on-one relationship with the consumers. So sponsorship for media for Amazon might not be as critical as it might have been for Sky or for Fox here in the States. And so that is something, we're going to have to navigate through. I mean, when you look at, on the positive side, look at what happened with Netflix and TKO, that's a streamer now going into sport. Why? Because sport's going to really drive results for those streamers. But the margins in streaming are different than they are in linear media. And so the opportunity might not be the same in streaming that it was in linear media. And sports is invaluable in linear media, but probably a little less valuable in streaming media. And so it's navigating that change. But in that change, I have the one-to-one offering that I never had before. And I'm probably got a lifetime value. What's the lifetime value of a Liverpool fan? Pretty good. What's the lifetime value of an All Blacks fan? Pretty good. What's the lifetime value of an Alabama Crimson Tide fan? Pretty good. So there'll be a whole new channel of commercial opportunity for clubs and federations, and we're in that transition right now.
Interesting, George. I'm conscious I've got a couple of minutes left, so I wanted to jump quickly into the NFL, and particularly one of the most impressive parts of what you've intimated and talked around was the relationship with the NFL and the work with Overtier and the Game Pass proposition. Obviously, what's been interesting more recently is now they've done the deal with DAZN to shift towards a completely different trajectory, I suppose, and really owning the first party relationship to start sharing. Taking a nice big check and handing over those rights basically for the platform to a third-party network. What's your take on that? I mean, for me, it looks the Game Pass was one of the best products in the market. It's probably one of the most advanced in terms of being in the market for a long time as well, which helped it develop. And the shift that they've taken, the NFL, to put it into the DAZN platform, and in the same way the Netflix have done with WWE, I suppose, shifting a big piece of fairly premium rights into a streaming platform, feels a bit counterintuitive in some instances to what the market dynamics are showing about how fans are consuming live sports. What's your take on particularly the NFL's approach with something like the Game Pass proposition?
I was really proud of, Game Pass really grew under our leadership, and we were awarded 60 countries and ended up with 181 because of the performance. So I was really proud of what we did there, and it was a great investment for us. So we're happy with that. I think the hope was DAZN. They're going to have to refine their direct-to-consumer offering. They're global, and there was a healthy financial incentive there that was probably hard to pass up. And God bless them. God bless the NFL. I can't blame them for taking it. So good for the NFL. Good for DAZN. I think that offering within DAZN's package is really valuable, and so it's probably really good for DAZN and really good for the NFL. And then again on Netflix and TKO, I think give those guys credit at Endeavor. They're pioneers. That's a big deal. That's something a lot of people thought would never happen, and it did. And I really think the gist behind that is that consumer base of the WWE and the loyalty of that consumer base. Obviously, Netflix saw a lot of value in that, and I would think it's good for sports because it's not the only sport or entertainment vehicle that has a very sticky and valuable base. So sports are always going to be valuable. There's nothing like it. They put big audiences together with engaged consumers that are brand loyal. And so it's always going to have a high value proposition. We are going to go through a little bit of a change here, but change is part of life. And I'm sure, we went from the newspaper to the radio to the TV to the internet. Who knows what's, we've got the Sphere out here in Los Angeles, in Las Vegas. Who knows what's next, right?
Absolutely. So look, final question for you, George, to wrap things up. You guys haven't been afraid of doing some pretty big deals, and you also haven't been afraid of taking those exits when the opportunity arose. What's next? What's next for you guys? Is it business as usual, looking for opportunities and continue to raise funds and generate more money for your investors, or is there a different approach or pivot we could expect in the future?
Well, I think for us in the short run, we'll continue to look to add new companies. And then in the long run, we'll be looking to continue to do what we're doing, and we'll see where that takes us. It could be some new opportunities for us in that regard. So look, I'm going to keep working I'm at this. I want to do this for another 10 or 15 years. So I'm not going away. I love what I do. I love the business. You're talking about a guy that grew up loving sport, came from a family of sportsmen, and and got to work in a business that he loves. So I don't see that changing anytime soon.
Well, look, George, I really appreciate you finding some time in what is a very busy schedule for you at the moment. Lots of deals happening, and I'm no doubt looking at your next big opportunity. Look, really excited and thankful for what you guys are doing for the industry, because I do think that the industry does need more and continued investment in that sports business ecosystem to keep driving the transformation and those opportunities you've talked about. So look forward to seeing what's next from you and from the Bruin team.
All right. Well, thank you so much, Nick. It's great to be here, and hope 2024 is a great year for you and your SportsPro.
Before you go, myself and Nick would just like to thank you for tuning into this episode of Streamtime. If you found the episode insightful, please make sure you like and subscribe on whichever platform you listen to. As a growing podcast, we'd greatly appreciate your support in sharing or writing a review. Ultimately, we want this podcast to not only entertain you, but also hopefully help you navigate the digital sports landscape. If you have any feedback on previous episodes or any topics and speakers you'd like to hear from in the future, please don't hesitate to reach out. You can find myself and Nick Meacham on LinkedIn or on Twitter. My Twitter handle is @SportsProChris1. Nick can be found @SportsProNick. Of course, if you want to stay fully up to date on the sports business news cycle, please make sure to visit the SportsPro Media website or sign up to one of our several newsletters to make sure you don't miss anything. Once again, thank you, and we look forward to you joining us next week on the Stream Time podcast.